Good morning, traders. John Caruso coming to you here for June 7th with your currency update for the day. First, we'll take a look back at some of the economic readings we saw come out over the last week. Non-farm payrolls, 38,000 jobs were created in the month of May, which was a huge miss by approximately 120,000 jobs. Market was looking for 158. And then of course we heard from Janet Yellen yesterday, and she continues to kind of flip-flop on her view towards interest rates moving from hawkish to dovish, hawkish, dovish. So there's been a lot of flip-flopping going on at the Fed as the economic numbers start to roll in more and more negative here as the cycle drags on. I still continue to hold the belief that the economic cycle is slowing. And growth is decelerating versus accelerating. And there's a number of things you can kind of point to. You can actually look at corporate profits, corporate earnings, which it appears we are in the second quarter of seeing declines. I believe we have an aggregate decline in earnings and profits in the S&P 500 of about 8.5%. So this is back-to-back quarters of companies coming in under expectations. So that's number one. The other thing you got to start looking at, also GDP levels have been decelerating as well, quarter over quarter. But you also have to start looking at the employment situation now. This is the third straight miss we've seen in the employment numbers, and this one was a big one. Okay, and as we all know, employment is a lagging indicator to the health of the economy. So when the employment market starts to roll over, that usually confirms the slowdown. So as far as that's concerned, there's very little to cheer in the economy at the present moment other than equity valuations, which we believe remain severely disconnected with reality. So that's something to kind of take note of. On to the currencies. I'm done with my spiel here. The USD, 93.86, that took a big hit to the downside after we did see the miss on unemployment. I do believe we are currently in an oversold state. You might see a retracement back towards 94.50 to potentially as high as 95 here in the near term. So watch for that. Inversely, looking at the euro, inverse reaction to the unemployment number here in the United States. That market ripped higher. I think at one point on Friday, we were up almost 200 points on the euro. Right now, we're trading a shade under 114 at 113.90. That's down 23 points. I also believe as we start to draw closer to the Brexit vote, that you could see some fear coming into that market here, where we could see a setback here from a current overbought state in the euro currency. I'll also hit on the Japanese yen here. The Japanese yen's been on a tear for the past week. We are trading 93.50. However, I do have us in an overbought state right now. That does kind of warrant some caution for the bulls moving forward at the present moment. I do believe we are a touch overbought at the present level. One we'll also talk about is the Australian dollar. This is one to really watch on a pullback. On a pullback, perhaps to 73 to potentially 72.50, it could be a good time to become near-term bullish on the Australian dollar. The Aussie is a commodity currency. If you've been following the CRB index this year, we are up 9% year to date. Okay, so commodities have certainly been a highlight to the year. However, I do have the commodity index slightly overbought at present levels. So if we do get a pullback in the CRB, we should probably see a pullback in turn in the Australian dollar, which could present a great buying opportunity. Also, you want to keep an eye on gold. Gold right now, it's one of the top performing asset classes in the market today, up 16%. I do believe we're a little bit overbought near term in the gold as well. So on a pullback in gold, on a pullback in Aussie, could be a good time to look at the bullish side of things. So that's all I have for you today. Feel free to reach out to me anytime.
And options on futures may involve substantial risk. It may not be suitable for all investors.